Hey there, financial masterminds. Welcome back to the channel where we tackle the big questions that could literally change your financial future. Today's big question: should you pay off your mortgage early or hold off and invest that cash elsewhere? I know it sounds simple, but there's a lot more going on here than meets the eye. And trust me, this could save you thousands of dollars in the long run. Or maybe it'll even make you richer. So grab a seat, get comfy, and get ready to dive into the ultimate mortgage debate. And hey, don't forget to hit that like button, subscribe to the channel, and share this video with your friends. Trust me, you'll want to know what the pros and cons of paying off your mortgage really are. Let's jump in. All right, first things first, let's talk about the traditional thinking, the advice we've all heard a million times. Pay off your mortgage early, right? Seems like sound advice, doesn't it? I mean, who doesn't want to be debt-free? Imagine no more mortgage payments hanging over your head, the sweet relief of owning your home outright. No bank can touch you, no monthly payment due. Sounds like a dream, right? Think about it. Let's say you have a $200,000 mortgage with a 3% interest rate. If you put an extra $2,000 each month into paying that down faster, you'd save on interest. Sounds good, right? But if you invested that $2,000 each month into something that earns, say, 7% annually over 10 years, you could end up with $400,000 or more. That's $200,000 more than the interest you'd save by paying off the mortgage early. Boom! That's compound interest working in your favor. So while you're sweating it out, cutting corners to get your mortgage paid off in 10 years, that other money could be out there working harder for you in the market or in investments that grow faster than that 3% mortgage rate. But wait, here's the real secret sauce: low interest debt. You see, mortgages typically come with low rates, especially if you've locked in that sweet 3% or 4% fixed rate. That means cheap money. And guess what? The bank is essentially lending you money for less than what you could be making by investing elsewhere. Now tell me, is that a bad deal? I don't think so. So why would you rush to get rid of that low interest debt when you could keep it around and, actually make money with it instead? You're getting cheap money for your mortgage, but you could earn much more by investing that cash in things like stocks, real estate, or other higher return investments. Okay, enough talk. Let's get real with the numbers. How much are we talking here? If you have a mortgage of $200,000 at 3% interest, here's what we're looking at. You're paying around $1,500 per month on that mortgage. You could add another $500 to $1,000 per month to pay it off early, but what if instead you invested that $1,000 per month in stocks? Assuming a modest 7% return over 10 years, your investment could grow to $200,000 or more. Meanwhile, if you were just paying off that mortgage, you'd save around $40,000 in interest over 10 years. So, which would you prefer, the $200,000 in growth from your investments or the $40,000 in mortgage savings? I'll let you decide. Now, I know what you're thinking. Well, that's all well and good, but isn't it nice to have peace of mind and not have that mortgage hanging over your head? Absolutely, there's something to be said for the emotional comfort that comes from owning your home outright. In fact, there are times when paying off your mortgage early does make sense. For example, if you're getting close to retirement, have a high-interest mortgage, or are feeling overwhelmed by debt, paying off your mortgage might give you that sense of financial relief. And let's not forget, some people just hate debt, and if that's you, well, I totally get it. Peace of mind is worth something. Also, if you're someone who's planning to stay in your home for the long haul and want to eliminate all your monthly obligations, paying it off might feel like the right move. But remember, we're talking long-term wealth here, and that's the part you have to think about. And here's another thing you might not have considered: tax benefits. As a homeowner, you can deduct mortgage interest from your taxes. If you've got a $200,000 mortgage at 3%, you're looking at a deduction of several $1,000s each year. If you pay off your mortgage early, say goodbye to that tax break. And that's money you're losing out on every year. You're basically giving Uncle Sam an extra piece of your pie. Don't do that. So after all of this, to pay off or not to pay off, it really comes down to your goals. If you're looking for financial freedom and want to maximize your wealth, it may be smarter to keep your mortgage and invest that money in higher return options. But if peace of mind and financial security are your top priorities, paying off your mortgage early could be the right call. And of course, it depends on your personal situation. If you're drowning in high-interest debt, paying off that mortgage might be your best move. But if you're already on solid financial footing with a good investment plan, keep that mortgage, let the bank do the work, and let your money grow for you. All right, folks, you've got the full picture now. The decision is yours to make, but if you found this video helpful, don't forget to hit like, subscribe, and share it with your friends. Maybe they're struggling with the same decision. And hey, drop a comment below. What's your strategy? Pay off early or let that mortgage ride? Let's talk about it. Thanks for watching, and as always, keep making those smart financial decisions. We'll see you in the next one.